Hey everyone, welcome. If you're thinking about starting day trading but don't know where to begin, this is the perfect place to start. In the next few minutes, I'm going to walk you through everything you need to know to begin day trading with confidence, even if you've never made a trade before. We'll talk about what day trading really is, what tools you need, the risks involved, beginner-friendly strategies, and how to protect your capital while learning. So let's jump right in. First, what exactly is day trading? Day trading is the act of buying and selling financial instruments, like stocks, forex, crypto, or futures, all within the same trading day. That means you open and close your positions before the market closes. The goal is to make small profits on short-term price movements. This isn't investing, it's active trading. You're not looking to hold positions for days or weeks. You're trying to capitalize on volatility, quick moves in price that happen within hours or even minutes. Now here's a hard truth. Most beginners lose money. Why? Because they don't treat it like a skill. Day trading requires education, patience, and discipline. But if you respect the process, you can improve over time. Before you place your first trade, there are some terms you need to know. Think of this as your trader's toolkit. First, bid and ask. The bid is the price buyers are willing to pay. The ask is what sellers want. The difference between them is called the spread. Next, volume. This tells you how many shares or contracts are being traded. Higher volume means more liquidity, which generally makes for better trade execution. Then there's volatility. High volatility can mean high reward, but also high risk. You'll also hear about margin. That's money borrowed from your broker to increase your position size. It can amplify gains, but also losses, so beginners should be cautious with margin. And finally, stop loss. This is an order that automatically closes your position at a set price to prevent a large loss. If there's one tool you always use, make it this one. Alright, what do you actually need to start day trading? First, you need a brokerage account. Choose one with low fees and real-time data. Platforms like TD Ameritrade, Interactive Brokers, or Webull are popular for stock traders. For crypto, you might look at Binance or Coinbase Pro. Next, you need a trading platform. This is where you view charts, analyze prices, and place orders. Many brokers offer solid platforms, but third-party tools like TradingView are also great for charting. You'll also need decent hardware, a stable internet connection, and ideally 2 monitors. It doesn't have to be fancy, just enough to see multiple charts and news feeds without switching windows constantly. And yes, you'll need capital. In the US, if you want to day trade stocks regularly, you're required to maintain a $25,000 account balance. That's due to the pattern day trader rule. But if you're trading forex or crypto, you can start with much less. Now, before you start using real money, start with paper trading. This is trading with fake money in real-time market conditions. It helps you practice entering and exiting trades without the emotional pressure of real loss. It also gives you time to learn your platform. While you're doing that, start learning technical analysis. This means reading price charts, candlesticks, support and resistance levels, trend lines, moving averages, volume indicators. These tools help you make informed trading decisions based on price action. Once you're comfortable with chart basics, it's time to learn some strategies. Here are 3 beginner-friendly ones. First, momentum trading. This strategy involves jumping on stocks or assets that are moving quickly due to news or high volume. You ride the trend for a short time, then exit before it fades. Second, reversal trading. Here, you're looking for something that has dropped rapidly and is likely to bounce back. It's a bit riskier, but if you spot a clear support level or oversold condition, it can be a profitable setup. Third, breakout trading. This happens when a stock breaks above a resistance level or below support, with strong volume. You're essentially trading the continuation of that breakout. Every strategy should have clear entry rules, exit rules, and stop-loss levels. Don't trade based on gut feelings. Trade based on a plan. Now, let's talk about risk management. This is where new traders sink or swim. Here's one rule. Never risk more than 1 or 2% of your account on a single trade. That means if your account has $1,000, your maximum loss on a trade should be $10 to $20. Always use stop-loss orders. Always. You need a predefined point where you accept that the trade didn't work, and you move on. No exceptions. Keep a trading journal. After every trade, write down why you took it, what happened, how you felt, and what you learned. Over time, this becomes one of your most valuable tools. Now let's talk about something most people overlook: trading psychology. Day trading can mess with your emotions. Fear of missing out, fear of losing, overconfidence after a win. These are the mental traps that derail traders. The market will test your patience, discipline, and mindset every single day. The best traders are the calmest. They treat it like a business. They have a plan, they follow it, and they don't let one bad trade ruin their mindset. One way to help control your emotions is to create a daily trading routine. Here's an example. Start your morning by checking the news and global markets. Identify any major economic events or earnings reports. Scan for pre-market movers or setups with strong volume. Then, write down your watch list. Set alerts. Define your trading plan for each setup. When the market opens, only focus on your top setups. Don't chase random moves. After your session, review your trades. Look at what worked and what didn't. Log the results. Then stop trading. Don't overtrade out of boredom. Finally, let's talk about how to continue learning and improving. Here are some great resources. Books like Trading in the Zone by Mark Douglas and How to Day Trade by Ross Cameron. Free charting tools like TradingView. Economic calendars from sites like Forex Factory or Investing.com. Trading communities on Reddit, Discord, and Twitter, where you can follow traders, ask questions, and learn from shared experiences. Just remember, don't rely on signals from strangers. Use communities to learn, not to copy. Day trading is a long game. You won't become profitable overnight. But if you focus on education, practice with discipline, and treat your capital with respect, you can give yourself a real shot at success. Thanks for listening. If this helped you, consider subscribing or checking out more content.